Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. Wednesday, we pretty much have a flat market today. Dow Jones down about 50 points. NASDAQ up 50 points. Still have a couple hours left in the trading day. That can change. Now, I'm expecting some more volatility in this week. We've had a down day, an up day, a down day. I mean, it's just, we're battling here. We're battling. There's a tug of war between the bulls and the bears going on right now. Look, we are oversold. We've been down 7 straight weeks in a row. This could be week number 8. That would be the longest streak for the Dow Jones Industrial Average downward for over 100 years. There has been a lot of damage done on the technicals, right? The technicals had broken down below the 200, below the 50, below the 20, below the 10. We have to retake one of those levels to get the rally up. And I do think we're going to do that. I think we're going to overtake the 10-day moving average, then the 20-day, then the 50-day, and I do even think we're going to overtake the 200-day, but we got to start with the 10-day. Look, there's real damage being done. There's $6 trillion wiped out in, household wealth. We've gone down in the U.S. stock market $6 trillion, but I do think a short squeeze is coming. I think a short squeeze is coming. Everybody's piling in on the short side. When the boat gets too lopsided for one side, look out, because it's going to tip over, right? Well, anyways, I think that there's going to be a short squeeze. A short squeeze just means that these shorts are going to be covering their positions, and it's going to push the market up higher. We'll see if I'm right. We'll see if last week's low holds. I think it will. I think last week's low will hold, and I do think we're going to get a rally, but we do have to overtake that 10-day moving average first. All right, so what's going on with real estate? Well, real estate, the numbers came out on new home sales. And guess what? They plunged. The numbers have plunged down 30% year over year. Now, that's not prices. That's volume. But here's the thing. There has never been more home building going on than there is right now. There's over 1 million homes being built right now. Now, what's going to happen to these homes? Well, they thought they would get them all sold. They thought they had a lot of them all sold, but the buyers are backing out. They're taking their deposit money back. Are they going to be a bunch of ghost towns? Is that what's going to happen? We're going to have a bunch of ghost towns? Look, when they started these buildings, builders, they got to start with building permits, right? So they pull the building permit and they start to build, and when they do the planning versus when they do the selling, it's two different stages. Look, they were planning when interest rates were at 3%, and right now it's at 6%, and by the middle of summer, we could be at 8%. I mean, it depends on what the Federal Reserve does. Now, the Federal Reserve, they say they're going to continue with 50 basis point raises. I think they got one more left in them, and then I think the whole markets are going to be starting to crash down, and I do think the Fed's going to reverse course. Think about that. They're going to reverse course at 1.25% interest rate. That's my belief. I don't think they're going to get it to 2%. I don't think the market can withstand 2%. And that's just the Fed rate. The mortgage rates will be much higher than that. Right now, we're pushing towards a 6% number, and we could be at 8% by August. So you got all these homes being built, and they're coming onto the market, but they were penciled in at 3%. Now at 6%, at 8%, they're really unaffordable. Affordability factor's gone. There's no buyers for these homes at those high interest rates because, interest rates really, if mortgage prices, they've gone up 42% just in the last 6 months, 42% higher to buy a home. Now, the cost of the home's also gone up because you got inflation running away with everything. You got supply chain problems. So what are they going to do with these million homes? How are they going to get them sold? Well, they're going to dump them on the market. And now if they got to sell them because, that's what they are. They're home builders, and they got to put them on at any price to get rid of them. And I think that's going to put downward pressure on the market. We'll wait and see how that all plays out, but it's not a good thing. It's not a good thing for the housing market. It's really not. It could crash the housing market. You look at home builders, look at like Toll Brothers, look at Lennar, look at Poultry. These are all down 30, 40% just this year. Now, I must confess, I made a little money short in some of these stocks. I jump in and jump out of them, and that was fun. I'm not sure I'd short them here. They're already down almost 40%. Well, but maybe they got a lot more on the downside to go if they can't get these million homes sold. Now, what I want to talk a little bit today about, it's kind of funny. Okay, Goldman Sachs, they get into this business of, it's called syndicating homes, right? Anyways, home syndication. They sold, they bought 87 homes for $45 million, right? But let me tell you exactly how this business of home syndication works. I know a little bit about this. I was in the business of, racehorse syndication. That's a little different business, but I used to own racehorses, and we put together a little syndicate to help pay for the horse, bring the horse to the racetrack, and then if it won, we'd all, divide the profits. Well, here's how it works in the housing market. All right, I'm going to use round numbers. All right, so let's say there's 100 homes, right? All right, and let's say they're selling for $350,000 each. Okay, so that you come in, you buy these homes, $350,000 for $35 million, but you don't need $35 million. Let's go get a loan from Goldman Sachs for $25 million, all right? And maybe we'll even borrow the extra $10 million, but let's just get the loan for $25 million. We'll put $10 million in. So $35 million, you got $25 million borrowed, right? And you're in for $10 million. Okay, and you bought these 100 homes at $350,000. Well, here's what they're doing. They're repackaging the deal. They're repackaging the deal at $500,000. $500,000, okay, and they leave that loan in place at $25 million. But what do they do for the other $25 million? How do they sell this $50 million project? $50 million project is 100 homes, $500,000 a piece. Well, what they're doing, there's been rule changes. They're doing crowdfunding. You see, you used to have to be an accredited investor. Now, an accredited investor has a net worth over $5 million, but now some of the rules have changed with this crowdfunding stuff that's going on. So anyways, this is a good way to fleece America, right? Okay, so they do crowdfunding and they say, hey, Goldman Sachs is backing this. Look it, you can get in. You put $5,000 in, we'll give you one unit. Okay, well that works, right? So you put in your $5,000 and now you have one unit of these homes that are at $50 million. Well, when they get all the crowdfunding done, they sold it for $50 million, but remember, they only paid $35 million. So what happens to the $15 million? Well, it goes to the promoter's pocket. He just made $15 million and you just got fleeced, right? Well, this happens at the peaks in markets. This doesn't happen down here because they sell it this way. They say, hey, Goldman Sachs is backing this. We're projecting 20% a year increase just like we've had the last 2 years. You're going to get rich if you just put $5,000 in and don't worry about it. There's no management headaches. You know why there's no management headaches? Because we're going to manage it for you. Oh, but we're going to charge you a fee. Let's just say the 100 homes rent for $2,000 each, right? Well, what is that? 2,000 times 100, that's $200,000 every month coming in. Well, we're going to take 10% of that. So we get $20,000 more in our pocket to manage these homes. Okay, so that's going to be every month we get to collect money. We get $15 million for selling them to you. We get $20,000 a month for managing them to you. Now, you got a 5-year commitment. Some of these programs have 10-year commitments, but after 5 years, we're going to sell these for you, and we're only going to charge you 10% to sell them. Now, if we do have a profit above the $500,000 per home, let's say we sell them for $600,000, we're going to take 1/3 of the profits, and you get the lion's share. You get 2/3 of the profit. Well, believe me, if it's a miracle happens and we go up 20% a year for the next 5 years, which is not going to happen, by the way, then maybe you get your money back. Maybe you get some of your $5,000 back. My guess is your $5,000 is pretty much gone into the promoter's pocket once you get into these crowdfunding situations. My advice, don't do it. Don't do it. I love real estate. Do it yourself. You don't need these syndicators. You don't need these people to handle your money. Look it. There are many people that do this. Another one that has a similar program would be Grant Cardone. He's becoming a billionaire, but I don't know how his clients are doing. I know a lot of them are not that happy, but that's just how it's done. Now, there's Goldman Sachs is in the business. I wouldn't be surprised if JP Morgan gets into this business. It's called selling real estate with crowdfunding because you no longer need to be this accredited investor. My way, it's a great way to lose your money. Stay out of programs like that. That's just my opinion. If you want to lose your money, go ahead and throw it in there. But you'd be better throwing it in, I don't know, anything. Throw it in some Bitcoin. I don't know. It's gambling, right? But the syndications, they are really fleecing you. Look at the fees that they're charging. Look at how much they're making. Do the numbers in your head. And then I'm pretty sure you're going to make the decision to opt out. this is just a little thing I wanted to talk about today. Look, I think the new home sales, I think their prices are going to start to drop. The volume's already dropped down 30%, but I think that the prices are going to start to drop, especially if the Fed raises another 50 basis points. Now, I think they're going to reverse course after this next raise. I do think they're going to raise 50 basis points in June, but then I think that's it. I don't think they can raise it anymore because you're going to see that stock market starting to come down, the housing market starting to come down. The Fed, they really can't handle the pain. Look, what's real interest rates, they have to get above the rate of inflation if you want to fight inflation. Inflation right now about 8.5%. According to the government. I think it's closer to 15-20%. But they'd have to raise rates above that. Let's say if they raise rates to 9%. Okay, what would that do to the housing market? Well, you don't need to be an expert. You could probably figure this out on your own. But if they raise rates to 9%, that means mortgage rates would be up around 12%, right? 12%. Whoa. My 50% housing crash, that would be so conservative. It'd be around 80-90% housing crash if the Federal Reserve was actually ever got serious about fighting inflation. No, I think they just want to see people in pain and let this inflation run. I think that's what their plan is, and I think it's a terrible plan. I do think they should raise rates. I do think they should crash the markets, the housing market, the stock market. These are all bubbles. There's going to be pain. And don't get me wrong, I'm not happy about this. I feel sorry for people. I feel sorry for people that are going to be foreclosed upon. I feel sorry for them that they're going to lose their house. I feel sorry for poor people when they go to the grocery store and they can't afford food for their family. This is a terrible situation we're in, and there's only one cause of the situation. That's the Federal Reserve. They caused it, and now they're telling us they're going to get us out of it. They can't get us out of it. There's point and no return. There's no option for them. And the option is to end them once and for all. End the Fed. That would give me a big thumbs up if you want to end the Fed. Anyways, I went on a little rant today. I hope you got something out of it. I enjoyed it. I don't know. I just like talking with you guys. It's fun. All right. It's Wednesday. Get out there. Have a great day, everybody. Give me that thumbs up if you can. And if you really liked it, hit that subscribe button. I need to get some subscribers up. Anyways, we'll talk again real soon. Bye-bye now.